Morning guys, Joel Frank here, market analyst for YouTrading, and today we're taking a look at gold. I've got gold here on, these are 4-hour candlesticks, although I'm quite zoomed out, you can't really see the candlesticks. But anyway, the main thing that's happened recently for gold is it's managed to break above a key area of resistance, which pretty much was that 1800 level. As you can see in recent, this week pretty much is the first time it's been above that level since mid-June. Now remember, in mid-June, this big drop, that was the hawkish FOMC. Then obviously we were caught in this sort of consolidation pattern between this area of resistance turned support, and also this other area of resistance as well. And going ahead, both of those levels are still key. But both of them, I mean, you can now look at as support. And it does look as though after we broke above that prior resistance here, well, we've now found support at that area. And potentially, you know, technically speaking, that does imply that gold could continue to push higher. If gold does continue to push higher, well, first things first, we've got to get above this 21-day moving average, which actually was quite good resistance. You can see here we collided with it, that was yesterday, about the middle of yesterday's session. We weren't able to break above it. Potentially second try could be coming today. Maybe we will get above it. Above that though, more important resistance in the form of, where is it? Come here. These two moving averages. That is the 50-day moving average in green and the 200-day moving average in blue. Now that's in the 118.30s kind of area. And then obviously I've got this other area of resistance marked up. It was resistance back in May, then it was support back in June, and then obviously we fell below because of the FOMC. But yeah, technically speaking, you know, things are still quite neutral for gold, but it does look as though we could see some gains and challenge some of these next areas of resistance. In terms of the fundamentals, why has gold been able to rise above this recent area of consolidation? Well, I think the key thing really has got to be the fact that US bond yields just continue to fall. I mean, I was just looking at the 10-year this morning. It was at it was under 1.35%, which is, man, like, do you remember, it was only a couple of months ago that yields were at 1.77%. I think that was the high for the year for the 10-year yield. Obviously, when yields fall, that is supportive for gold. So that has been really, for me, the key thing which has helped push gold above 11800. Why were yields falling? Well, I mean, there's a couple of reasons people are talking about this week. The data out of the US, like the ISM data out of Europe, hasn't been that great. Obviously, there's all the stuff going on with oil markets and OPEC not being able to come to a deal, which kind of puts their broader agreement at threat, which could, you know, obviously if OPEC collapses, then that will be terrible for oil prices. So all of that kind of feeds into a safe haven bid. You've still got people talking about concerns about the Delta variant, also another reason for safe haven bid. So yeah, all of these things pushing yields lower, and obviously gold itself is a safe haven, so that's been helping gold. We do have some key risk events coming up this week. Well, today really, we've got the FOMC minutes. Now these minutes should be quite interesting because remember, obviously we've already spoken about in this video, we had the hawkish shift from the FOMC last month, which sent gold lower. Now, the FOMC appears to be, given the dot plot, which was quite spread out, they appear to be more divided. So what we want to get from the FOMC minutes is more sort of insight into the hawkish arguments and how loud and how much agreement they have, and the same for the dovish arguments. So we want to know about the debate going on at the FOMC and how hawkish it is. Is it as hawkish as the dots imply? Is it less hawkish? If that's the case, then I mean, if it isn't as hawkish as the dots imply, then we potentially could see gold moving higher. But anyway, yeah, the key driver for gold is going to be yields, but also the dollar, and the dollar has been quite strong. The dollar is supported near recent highs. If the dollar had been falling alongside US yields, well, then you'd probably have seen gold already go above all these areas of resistance if the dollar had also been falling. So maybe That's the next thing we need to see, the dollars to start falling again for gold to really push on. But anyway, guys, hope you enjoyed this video and I will see you all in the next one.